Greetings and thank you for joining me at FutureMoneyTrends.com. I'm here with Marin Katusa. He's the Chief Energy Investment Strategist for Casey Research. Marin, thank you so much for joining us today.
Oh, it's a pleasure.
On when you look at the energy sector as a whole, as far as nationalization, a lot of people obviously you avoid the countries that it's obvious. A lot of investors I speak with are concerned about nationalization in an energy crisis as energy becomes more expensive. Is this something you see that could happen? With a lot of countries, possibly in South America or Africa?
Oh, it's happening as we speak. You look at what's just recently happened in Argentina. In 2012, Argentina basically nationalized the oil sector. And with that, it had a major spillover effect. When it nationalized the assets of YPF, that was a major signal of what's going on. From there, look at Venezuela and Bolivia, what happened in the last 10 years, also the same situation. So this is a cold war of resources. The big pinch of resources is really happening where these national oil companies are kicking out the foreign exploration companies, and it's going to become a major, major issue moving forward. Look how Venezuela, which has great oil potential, they've actually decreased their oil production since Chavez has been in power. Something really to understand that there's a nationalization of global resources occurring right now.
Wow. What does a person do to avoid this type of stuff? I mean, do you just stick with the U.S. and Canada and Mexico and Australia? And I mean, or how venturous can you get when it comes to going out to these countries in South America and Africa and even Southeast Asia?
Again, it depends on the individuals you're looking for. So if you're investing in a company, let's say a high risk, and this is part of your high risk portfolio, you have to assess if this company is going to Colombia. Is this management team in Colombia? They know their way around Colombia. They have connections in Colombia. Or is this management team using a bunch of consultants in Colombia and have been to Colombia just a few times? They don't even really know their way around. So you have to really assess, what type of management team are you investing in. That said, there's areas in Africa that are a screaming buy, but then there's other areas in Africa that you basically want to stay away from. So it's difficult to paint a broad brush, but I really like following the smart money, the management teams that truly understand not just the commodity, but the political minefield of where they're at. Because the reality is mining is not liked anywhere in the world. It's a very difficult sector. That is why you can make so much money in this business. We're talking about 10, 20 times your money. And, when I created the next 10 list, we also have our 10 bagger list. And there's individuals who are not only on the next 10 list, but are on our 10 bagger list and are in a very controversial commodity. They've made our subscribers over 10, 20 times their money. That's how you succeed in the resource sector.
If you could, please expand on that type of person, a 10 bagger plus they're on the next 10.
Yeah, right now we have an individual who's in our top of our list on the next 10 list, so that's the top 10 under the 40 in the resource sector, and they've had to have a major successful story in the resource sector. And then the 10-bagger list is from when we initiated coverage on our newsletter that our subscribers had to make a minimum of 10 times their money. We have one story that is on both of those lists, and that's UEC. That's Amir Adani. He's under 40 years old. He's built one of the lowest cost uranium producers in the world. This is all post Fukushima, and our subscribers have made over 1,000% gains with Amir. And these are the type of individuals that investors need to study and get to know and follow, because this is a guy that lives and breathes his company. His whole net worth is in his own companies. That's the type of person you want to invest in.
Now, when you look at, you said he's already given you a 10 bagger. Is it too late for people to invest in uranium energy?
Oh, no. You see, that stock, when we first recommended it in the Casey Energy Report, we had it as a buy under 25 cents. And the market, the whole global sector was very down. That was in the fall of 2008. And then as we move forward, that stock went to over $7. And then it's corrected now to the 2.5 level. And we updated to our subscribers, and it is a low-risk, low-cost producer in the U.S. That is something that is going to be very desirable moving forward, because as Vladimir Putin, the president of Russia, as he's cornering the uranium market. Remember, the last major purchases of uranium companies the Russians have been buying. The Russians just bought Uranium One, which was one of the largest publicly traded uranium producers. The Russians are cornering the uranium market, and the U.S. imports over 90% of the uranium it consumes. Now, here's a little fact for you to think about. In the early 1960s, there were 1,000 uranium mines in the U.S. Over 30 million pounds of uranium was produced in the early 60s in the U.S. Today, there are just over 10 producing uranium mines in the U.S. This is shaping up to be the greatest commodity bull market that I've seen in over 10 years. Right now, uranium is trading for less than most of the majors can produce the commodity for. That is why you want to follow the management teams that are the lowest cost producers. You will make a lot of money doing that.
Where does you just spoke about uranium energy? Where does uranium energy fall into that as far as cost of producers?
Well, they're actually in the lowest quartile of production. You see, most of the big mines around the world, let's say in Africa or even Australia, they're conventional mining. So what they do is they dig out, they blast the rock, they dig it out, they have the big machines, and then they got to process and they run the rock through the mill. They have to crush it and separate the uranium from the rock. In the U.S., what Amir has done with UEC is quite brilliant. He's taken an unconventional technology, which is called ISR, in situ recovery, which doesn't have to dig out the rock, so there's no big footprint, which is really important. So there's no big trucks, there's no pollution, there's no blasting, there's no crushing. And what they basically do is they pump in a oxygenated solution of water to dissolve the uranium from the rock, and then they pump it back in, and then they separate that water, which is pregnated with the uranium, in their facility, and it costs about half of what it costs to build a conventional uranium mine. And right now, they're able to make a profit when almost all of the producers globally with conventional production are losing money. So the future in the U.S. is low-cost production.
Now, KC Research has a special energy report coming out. Can you give us a sneak peek into some of the key points that the report will cover? And will the report be free?
Yes, for your readers, we'll make sure you guys get the deal. It's going to be I think it's around a $30 report, but it'll be available on our website. We'll get your viewers a free code. But this report is going to cover everything you need to know about uranium investing, different aspects globally, history of uranium, the different uranium bull markets. It's also going to talk about the political risks, conventional mining versus ISR mining, the costs of mining, the different companies, the Russian influence in uranium, and basically the most important aspect is how do you make money from this moving forward? So that's what every investor wants to know about. It's a report that is going to be followed very institutionally. We have a large institutional following, and it really is a report that every investor needs to read.
Marin, these nuclear reactors, who runs these? Is it the government that runs them or private companies?
Well, no, you have utilities are mostly private companies. For example, you take someone like Duke, which Warren Buffett was invested heavily in the past. They are large producers of electricity through nuclear facilities. And you see, the irony of all this is the big cost of nuclear energy is building these plants. In the U.S., about 20% of all electricity generation is by nuclear energy. So 2 out of every 10 houses is the lights are on because of nuclear energy. Now, to replace that existing infrastructure today would cost trillions of dollars. Not even Obama could print that much money to replace the nuclear facilities. Now, the cost of uranium, which is used as the fuel to generate nuclear electricity, makes up less than 5% of the cost. When you compare that to, let's say, a natural gas plant, which is about 2/3 of its cost, or coal, which is over 50% of the cost, the price of uranium is almost insignificant to these facilities that make nuclear energy. The only thing these nuclear reactors care about is a long-term, secure feed of uranium. So whether uranium is $50 or $200, it barely increases the cost of nuclear energy. Whereas coal or gas, if it was to move up that much, people couldn't afford the electricity cost. So even after Fukushima, the disaster in Japan, China came out and said, you know what, we've studied this, and we have no choice but to build more nuclear reactors. China is just in phase 1 of their building. They're going to have over 50 reactors. Saudi Arabia, one of the largest oil producers in the world, plans on building 16 nuclear reactors. India is building them. South Korea is on the plan. Even Japan, after the Fukushima disaster, has come out, and after the election in December, has stated, we need our nuclear energy. So nuclear energy is here to stay, and there is a invisible bull market. Nobody is talking about it right now because it's the unloved stepchild of the energy sector. But this is where you're going to make a fortune.
Now, look, talking about Fukushima, has the world and I guess the utility companies, have they learned the lessons of Fukushima? I mean, is this much more preventable to happen again, something like this?
Well, you see, it's a difficult thing to say because these existing plants are already built. And the disaster that happened in Fukushima, that was an earthquake that has never been tracked before in over 200 years. And that was just all of the things went all wrong at the time. So when the tsunami came, it took out its backup reactors. So when that came out, the meltdown, it was just bad luck after bad luck multiplied by more bad luck. So will there ever be, can all the utilities say we are safe 100%? No. Anyone who would say that is wrong. But what they have done is reassessed all of the risks comparable to, the largest magnitude, like an over 9.0 on the Richter scale earthquake, and they've now using that intensity to upgrade the existing infrastructure. Now, we've had 3 major nuclear issues. We've had 3 Mile, we've had Chernobyl, and now Fukushima. And yet, globally, the world has said nuclear is here to stay.
You think the world could survive another Fukushima if we had another situation in Japan or another part of, let's say, the coast of California?
Humans are very adaptable, and we will survive. If someone asked before Chernobyl, could you survive something worse than 3 Mile, people would say no. That when Chernobyl happened, we survived. If someone asked after Chernobyl, could we survive something post, like a Fukushima, all of the pundits would say no. Fukushima has happened. It has been the worst disaster of all time, and yet Japan's back on its feet, and we've survived. So I will say, yes, we as a human race will survive another Fukushima.
How does nuclear and even other alternative energies react to oil? Because oil is very volatile. If something happened with Iran, I'm only mentioning it because it's on the front page of Drudge right now. Another, this thing's been going on for years. Where it looks like there might be something that's going to happen militarily. How does something like a uranium respond when oil goes up? Let's say oil shot up to 150 or something over the next few weeks.
Sure. Well, in 1973, when the crisis happened, the OPEC basically said, you're not getting cheap oil anymore from us. That was the beginning of the second uranium bull market. Uranium went up over 10 times during that period. Uranium companies could not, before that, could not produce the material for what they were selling for. We are exactly at that situation today. So oil is very, very volatile. Nuclear is what we call a base load power. It runs 24/7. It doesn't matter what's going on with natural gas or the wind. How wind is affected by night, any type of weather, and solar is affected by nighttime. They're not base load. They're not dependable 24/7. Nuclear is. And that's why it's so important to every major country, whether it's France or America or China. So if there is a major issue with oil, the past has shown us that is very bullish for uranium. Now, moving forward, now we know that the higher oil, which we all know is coming, is bullish for uranium. At the end of this year, the Russians are ending the HEU agreement. It's an agreement that the Americans signed with the Russians 20 years ago to get cheap uranium from the Russians getting their nuclear warheads and downblending them to make nuclear feed. That ends this year. And when that was signed 20 years ago, USSR fell apart, Russia was broke, and Bill Clinton was a world power. He dictated the terms of that. 20 years later, Putin is in power. Russia is the world's largest producer of oil. And China, India, Saudi Arabia, South Korea are all waiting in line, willing to pay double what uranium is trading today, as long as they get a secure, long-term contract of uranium. So there's many factors lining up to make uranium a big, big bull market in the years to come.
Now, investors who want to buy uranium, there is no ETF or a way to buy uranium that way. You have to buy the companies, correct?
Well, there is a nuclear ETF where it has a different breakup of companies. We don't recommend that because you're basically buying a bit of all of them. I think you can do your own research and pick better companies, lower cost producers, and it depends on what type of investor you are. If you're looking for the bigger gains, bigger risk comes with that. But there are ways to buy. In our newsletter, we have one company which basically is just a direct proxy to buy direct uranium. This company has over 7 million pounds of uranium and over 2 million pounds of US6, and they bought it about 6 years ago. It trades at a 20% discount to its NAV, and that's just basically a company. It's kind of like a gold GLD, where they just basically trade on how much uranium and UF6 they have. But if you're looking for the big gains, I recommend looking at the companies that are low-cost producers that are going to increase their production and also increase their exploration success. That's where you're going to get the biggest bang for your buck in the nuclear sector.
Who's the buyers? So you got the medical industry, obviously the utilities, and some governments. But as far as is there any way anybody can track the price? I mean, I know you can track the price, but I guess what I'm asking for people who like they have their little thing on Kitco. It's gold is very understandable on who the gold buyers are, and the gold's moving up and moving down. But the buyers of uranium, they're not. It's not as open. It's not as an open market. I mean, like you said, I mean, I can't go out and buy uranium. So
Exactly, and if you did, where would you store it? So there's a lot of difficulties with it. So uranium trades in three different markets, and this is something that, it's a very good question on your part. Very few of the media ever ask this question. So there's something called the spot market. If you want uranium right now delivered to a utility anywhere in the world, you pay the spot price. Then there's the long-term price. That's saying if I want the uranium delivered at some price that we both agree at in a year, then that is the long-term price. So right now the spot price is around $43.50 US per pound of uranium. The long-term price is $56.50. Then we have something where the utilities go out and say, no, we need a long-term supply of uranium. And there's a forward curve, it's called. So, for example, we already know that in 2018, so 5 years from now, the utilities are paying $68 per pound of uranium. So let's just think about this. Why would a utility like Duke or anyone be willing to pay $68 US per pound today for delivery in 2018 if they didn't think that uranium is going to be worth a lot more down the road than it is today?
Mhm.
That's over 50% more that they're willing to pay in 5 years than they're paying today because they can't store it anywhere today. So we already know. Imagine if gold was trading 50% higher in 5 years and companies were buying and selling that. Everybody would be going crazy in the gold market because they know that it's going to go up 50% in 5 years. That is exactly what is going on in the uranium sector right now, but nobody is talking about it. No media has ever mentioned that yet.
That is some amazing jaw-dropping information right there. I've never heard that at all from anyone. Marin Katusa of Casey Research, thank you so much. You are a wealth of information. We appreciate your time.
Always a pleasure.
Thanks, Marin.